Usually, being right is a pretty comforting thing, like a binary thing. You check your blind spot, you change lanes on the highway, and you arrive safely.
Right, it's safe.
Yeah, exactly. But in the bleeding edge world of localized AI trading, hitting your target, say, 70% of the time, that can still leave you completely mathematically ruined.
Oh, absolutely ruined.
So welcome to the deep dive. Today, we actually have our hands on something incredibly unique. It's a raw 5-day technical diary from a developer. This is from May 18th to May 22nd, 2026.
A really fascinating window of time.
It really is. We're looking at 3 distinct automated trading bots running side by side in live markets, and honestly, a whole lot of algorithmic hubris.
Yeah, these logs are, well, they basically dismantle everything we're culturally conditioned to believe about prediction and success.
Right. And before we get into the actual daily profit and loss, we really need to set the stage for the era we're looking at here. I mean, 2026 local AI.
Exactly, because this is a snapshot of a major paradigm shift. Independent developers, organizations, quants, they're all actively pulling away from those massive cloud models.
Right. They aren't using the big commercial APIs anymore.
No, they're running models like Qwen 3, Llama 4, and DeepSeek directly on local edge hardware.
And the reason for that is pretty clear, right? I mean, bouncing an API call to a server farm hundreds of miles away, it just doesn't cut it when you're trading currency pairs.
No, the latency alone will kill you.
Exactly. You can't afford the latency, the API costs eat right into your margins, and frankly, nobody wants to hand over their proprietary trading edge to a third-party cloud provider.
Right. You want the reasoning engine right there on your own bare metal. Total data privacy.
Total control. And our mission today for this deep dive is, by unpacking this developer's daily execution logs, we're going to discover some really profound lessons about risk.
And about the limits of artificial intelligence itself.
Yeah, and ultimately why just being right is actually the least important part of a successful strategy, which, applies to all of you listening, whether you're coding bots or just trying to navigate business decisions.
Oh, 100%. The developer here was testing exactly that, giving a localized, edge-based LLM the keys to a financial vehicle.
Right. So to understand the results, we need to meet the contenders. The developer had 3 tools testing side by side. Let's start with the baseline, which is a bat called BoundSniper.
Ah, BoundSniper, the control group.
Yeah, trading USDJPY. And the thing about BoundSniper is it has 0 AI logic. None.
It's completely dumb.
Exactly. It simply uses Cloudflare tunnels to receive TradingView webhooks and execute them on MetaTrader 5 or MT5.
Right.
It's basically like a highly obedient courier. It doesn't read the package, it doesn't judge the contents, it just delivers it.
Yeah, it executes a predefined signal, applies a static stop loss, and just walks away.
Okay, so then we have the second bot, which is a big step up, LLMBridgeTrader.
Right. LLMBridgeTrader. This one is operating on the euro against the US dollar. And this is your AI-driven bot, but it operates as a planner.
What do you mean by planner exactly?
Well, it doesn't just blindly guess the market direction. It actively evaluates the context and decides between open, hold, close, or reverse.
Oh, wow. So it's managing the whole life cycle.
Exactly. And while it does that, it generates specific stop loss and take profit parameters for every single move.
Okay, very cool. But then we have the third bot, the hybrid, GateGrid AI, trading the British pound against the US dollar.
The masterpiece, on paper at least.
Right. On paper, it's the most complex. It's a dual-layer system. First, it uses a machine learning model called CatBoost to calculate entry probability based just on the time of day.
Like figuring out if we're in the Tokyo, London, or New York sessions?
Exactly. And if that checks out, it hands it over to a local LLM, an Llama instance, to evaluate the context. Things like the spread and the volatility, or ATR.
It's designed to be the ultimate bouncer at the club door. Both the statistical model and the LLM have to agree, or the trade gets completely blocked.
Okay, let's unpack this. Based on those blueprints, you've got the dumb courier, the AI planner, and the hyper-filtered hybrid bouncer. Which one do you expect to be the winner?
I mean, logically, you'd assume the hyper-filtered GateGrid AI would absolutely dominate.
Right, because you're maximizing your selection power. You're using multi-gate filters to avoid any bad entries.
Exactly. But the developers' logs from May 18th and May 21st reveal a really shocking reality.
Yeah, let's look at the numbers. Because on May 18th, GateGrid had a win rate of 66.7%.
Which is solid. Most traders would look at an equity curve going up all morning and think they found algorithmic nirvana.
Right. But it ended up losing 1,002 JPY for the day.
The worst performer in the entire portfolio.
Wait, how does it win 2/3 of the time and still lose 1,000 yen?
Because of two massive losses. It took a hit of negative 680 JPY and another one of negative 747 JPY.
Oh, wow. So 2 single failures just wiped out a whole day of tiny methodical wins.
It instantly incinerated them, and that exposes the core flaw of these grid-style systems.
Which is the underlying logic Acrid was using, right?
Yeah. See, the AI was overly focused on that selection power we talked about, getting the entry right, but it completely lacked loss control.
How so?
Well, grid systems operate on the assumption that the market will eventually revert to the mean. So let's say the bot buys the GBP USD at 1.250, right? And the market drops against it to 1.2480.
Okay.
Instead of accepting that it was wrong and taking a small loss, the bot just buys again.
Wow, averaging down.
Exactly, averaging down. It pulls the average entry price lower.
Yeah.
So if the market just bounces up a tiny bit, it can close the whole basket in profit and keep that 66% win rate looking pretty.
But I'm going to push back on this a bit.
Mm-hmm.
I mean, if Alama and Cat Boost are so smart at reading the ATR and the spread to filter out bad environments at the front door, why didn't they see the loss coming?
Because predicting the immediate future is, it's a fundamentally different computational task than managing an active, cascading failure.
Okay, explain that.
The developer's realization here is brilliant. They noted that filtering the front door doesn't matter if you don't have an emergency exit.
Wow.
Gate grids spent all its processing power trying to be right about when to enter. But once it was inside the trade, the AI was effectively blind. It just mechanically kept stacking positions into a losing trend.
So entering a situation is entirely different from knowing when to escape it.
Precisely. And May 21st proved it wasn't a fluke. A two-level grid exposure resulted in a painful negative 1,432 JPY damage. The system's programmed mandate to avoid closing a loss basically drove it straight off a cliff.
Right. So if hyperfiltering entries doesn't work, what actually does? Let's turn to the logs for May 19th and May 21st and look at the second bot, LLMBridgeTrader.
Yeah, what's fascinating here is how LLMBridgeTrader succeeded where Gate Grid failed. It abandons that grid-style averaging entirely.
Right. And on May 19th, this bot hit an incredible 91.7% win rate. It made a net profit of 972 JPY.
And what's wild is even when the developer pushed it, they doubled its lot size to 0.02 on May 21st. It still brought in a solid 824 JPY profit.
It navigated the chaos perfectly. And I think this goes back to your point about the planner concept. Its success wasn't just predicting BUY or sell like a magic 8-ball.
No, not at all. It managed the whole life cycle. It was outputting these really detailed JSON structures.
Right, with confidence levels and specific setup types, like if it's a trend or a breakout.
Exactly. But here's the real secret sauce, the critical safety net that made it work. LLMBridgeTrader isn't actually fully unleashed.
No, it's not.
No. The developer hard-coded strict safety boundaries using a deterministic Python supervisor.
Ah, so there's a leash on the AI.
A very short leash. If the AI suggests a stop loss that is too wide, or if it proposes a risk-reward ratio that's too low based on current volatility, the Python system literally blocks the trade.
It just refuses to execute the webhook.
Exactly. It drops it. It's this concept of structured autonomy. You have the incredible contextual reasoning of a local AI, but it is safely housed inside strict, unyielding mechanical rules.
You manage the AI, you don't ask the AI to manage the risk.
That's exactly it.
Okay, so with these two complex AI bots battling it out, doing all this heavy lifting, why on earth is the developer still running BoundSniper? The completely dumb, rule-following bot.
It seems like a waste of margin, right?
Yeah, I mean, in a 2026 local AI environment, why run a bot that could have been coded in, 2018?
Because in any rigorous scientific or engineering test, you absolutely need a baseline, a control group.
Okay, that makes sense. Let's look at BoundSniper's logs for May 22nd, the final day.
Right, the day the market was super fragmented.
Yeah, the whole portfolio of AI bots lost over 1,500 JPY that day. It was a bloodbath.
Huh.
But BoundSniper, it quietly made a profit of 38 JPY across 4 trades.
It never makes huge money, but it rarely crashes.
Right.
And the scientific value of this is huge. BoundSniper proves that the basic plumbing works.
So it's fine.
Yeah, the Cloudflare webhooks, the MT5 execution speeds, the broker connections, those are all functioning perfectly.
Oh, I see. So when the AI bots start acting erratically and losing money, it's not a server lag or a connection drop?
Exactly. BoundSniper acts as a stable anchor. It isolates the variable. You can look at it and say, okay, the simple rules survived the chaos. The AI logic is what failed. It answers the question of whether the AI is actually adding value over just basic, boring rules.
And on May 22nd, the AI definitely was not adding value.
No, it was destroying it.
So looking at all 5 days of data across these 3 totally different architectures, I really have to ask. So what does this all mean, especially for you listening, even if you aren't writing Python scripts or trading currencies?
Right. The developers synthesized this into one ultimate thesis on May 22nd. Across all 3 bots on that final day, the win rate was actually a respectable 57.1%.
Which was 8 wins and 6 losses.
Yeah, the majority of the decisions were technically right.
Yet the net result was a heavy loss.
Exactly, because it's not about how often you win, it's entirely about how you lose.
Wow. Yeah, that scales far beyond just trading. Whether you're investing your own money, running a business, or, adopting these new local AI tools into your workflows in 2026.
You can't just ask, how often is this model right? That's a trap.
Right, because an inflated win rate is an illusion if the drawdown is fatal.
Precisely. You have to ask, what happens when it's wrong? Your survival depends on loss control. GateGrid got wiped out because it couldn't accept a microfailure. LLMBridgeTrader survived because its autonomy was strictly bounded by rules that mathematically prevented a fatal blow.
So you have to build the brakes before you build the engine.
Exactly. You need the emergency exit before you worry about the front door.
That is such a powerful takeaway. We've journeyed from the sheer failure of the hyper-cautious GateGrid to the real success of this strictly bounded LM and BridgeTrader, all built on this rising trend of running AI locally.
And honestly, looking at the broader 2026 AI context mentioned in these sources, it leaves us with a really provocative thought.
Yeah, let's hear it.
Well, the sources talk about the rise of the Hummies agent and these new bots that have long-term memory and self-learning capabilities.
Right, they aren't just static scripts anymore.
Exactly. Right now, in this diary, the developer's the one reading the logs manually and adjusting the code. But what happens to the global financial markets when thousands of these locally hosted AI agents are given long-term memory?
Wow.
When they can instantly learn from their own painful micro-losses and self-correct their risk parameters in real time, completely autonomously.
That changes everything. Does the market become perfectly stable and frictionless because all these agents are perfectly risk-averse?
Or does it trigger an evolutionary arms race that human regulators can't even comprehend? A hyper-fast algorithmic warfare of shifting risk thresholds.
That is a terrifying and fascinating thought to leave you with today. When autonomous intelligence controls the capital, the definition of risk changes entirely, something to definitely ponder on your own. Thanks for joining us, and keep diving deep.